Welcome to episode 5 of Long Shots, our weekly podcast. This is Nikhil and hi Sharad, how are you?
I'm very good, and it's good to know that we're already into our episode 5 now.
Yes, milestone. Well, another milestone is going to be tomorrow. So Sharad, I know Mr. Urjit Patel is busy, but why are you busy these days? Are you transferring dollars?
Into rupees?
What else, man? Your hard-earned cash, is it coming back?
No, I've not been doing that, but it makes a lot of sense to do that. I think, tell me what you think about it, but I think rupees like nearing its low. I think it should revert from here. I mean, touch wood, but I feel like RBI certainly needs to step in, which they are meeting tomorrow. Let's see what it happens. But clearly, I mean, we are on back-to-back days of 500-point plus sell-off in the domestic markets.
Yeah.
Clearly not the greatest of signs. Oil is at, what, $85?
Yes. So oil is at 85, rupees now touching 74. I think 2 weeks back, they were thinking that above 72, that's the threshold. Now the threshold has moved to 74.
Yeah.
So I've given up in terms of forecasting where it's going to head now. But yeah, obviously the dollar, the crude oil price going up has a big role to play there.
Yeah, and if you just look at sort of how the market's fallen off, I mean, you can see that the big heavyweight players, let's call it Reliance and Infosys, TCS, HDFC, all are down, mid-single digit, let's call it. And, those weights matter. You can clearly see them translating into the broader index sell-off metrics, right? Which are the numbers anyways mainstream medias report most of the times. So clearly happening. But I want to ask you about RBI's meeting tomorrow. It seems very interesting because on one hand, they've sort of talked about inflation targeting as their go-to method and underlying premise of how they manage rates and monetary policy. But this is a special situation, right? I mean, oil prices are not really in the RBI's control. So they got to do something, right?
Yeah, so just to give a bit of context to listeners, RBI started their bi-monthly monetary policy committee meeting yesterday. So it's supposed to conclude tomorrow, in which they're going to tell whether they're going to, increase or decrease or keep the repo rate stable as it is. I think generally they only drive it based on inflation. So if prices are going up too quickly, generally RBI would increase the rates in order to, get a hold on the economy and the liquidity.
Correct.
But I think that this time, as you correctly said, there are a lot of other factors which are going to play a role. So even though inflation right now is around 3.7%, which is in the target range of RBI, which would warrant them not to do anything.
Yeah.
But because the rupee is weakening, the crude oil prices are hitting up an all-time high, markets are down, so there is a good chance that RBI would use repo rate as a lever to bring the rupee back into stabilization. Even though there are a lot of other things which are going on in the background, the government, if you remember, announced, control on the non-essential import list, which I always found funny, as well as, they have now allowed external commercial borrowings. They're trying to bring in more and more dollars, but probably RBI will do a bit more direct decisive action in order to control it.
Yeah, and target inflation is what, 4% plus minus 2?
Yeah, it's 4 plus minus 2.
So we're well within it.
Yeah. So that should not be a driver for the decision. It should be all this news flow. So yeah, it's their hands must be completely full at the moment, and it's ironic because they have a very different role to play versus U.S. Federal Reserve, who are who want to increase rates to calm down the economy, and our economy is fairly calm already, and they are still compelled to do the same action.
Yeah, and if you dig deeper, it's always interesting to see what signal the bond markets are giving away.
Right.
And something that you and I have also talked about in the past on the yield spread, or basically long-term interest rates or long-term bond yields minus short-term bond yields. And, historically it makes normal and intuitive sense that long-term rates are higher than short-term. But sort of we are in an environment where that spread is narrowing, and there's a realistic threat of something called as the inverted yield curve, which essentially means short-term rates have moved higher than long-term rates. And this is sort of a signal that has always, almost always resulted in a period of recessionary environment.
Right.
So obviously very closely watched. Fed chairman also has been busy, like Mr. Urjit Patel, signaling the markets with something of a different tone, but still signaling the market. Right. He seems very comfortable. He says that.
So where is right now the spread at?
It's around 23 basis points, very tight.
Right.
This is on the lower end.
So tell me, like, if suppose the short-term yields go up and the long-term yields stay the same, that's when the inversion happens, correct? In case of U.S. Treasuries.
Correct.
And so what's the impact? Like, okay, if they are higher, what does that exactly mean?
Yeah, what it actually means is that investors are asking for a higher rate of return on short-term lending relative to long-term. And, essentially what they're saying is that from an investment standpoint, bond investors now, are seeing the current interest rate environment as more attractive to lock in prevailing rates and under the expectation that future rates might not be as high. So it's a sort of a signaling effect that rates are going to be low in the future, which, are generally correlated with a period of weak economic growth. So that's what I think the signaling is.
Right. Yeah, I think that signaling effect comes in personal life as well a lot of times. Like 2 days back, I was asking my friend for some money. He did not give me.
Yeah.
So maybe he doesn't think I am very creditworthy.
In the short term.
In the short term, right. Long term, I'm always fine.
Yeah. No,
Awesome.
it's very interesting. We both follow the US markets and the Indian markets, and it's interesting that there are such importance on the Federal Reserve and the RBI here,
Yeah.
and what they're signaling to the markets, because the markets are moving, but the messaging is completely different and opposite.
Yeah.
And
Yeah.
as you would expect, because we talked about how yields are rising in the West, and there's a capital outflow issue. But all these things that we've talked about are to be seen there in the markets now.
Yeah, and in India's case, obviously, bank stocks, IL&FS, NBFCs, they are not helping. They are just muddling the waters even more, right?
Yeah, I mean, every time I open the business newspaper, I feel like there is so much of things to be disappointed about rather than be happy about. There's just a sense of negativism all over, like IL&FS. We'll come back to that in a bit.
I love it, man. It really suits my cynical self.
Yeah. It's, ongoing risk. People are talking about possibility of recession in US. Oil's at all-time high, so Indian economy is on the slowdown. Yields are rising, so there's capital out. Like, it's just everything. And then there are, NPAs, and IL&FS has a new board team out. And I wanted to
And
ask
now
you-
Vladimir Putin is visiting India.
That's the most
Cherry
interesting.
on top.
Yeah, I'm very interested to see if they come up with any kind of oil-related conversation, which would be of any use.
Sharad, they are not bringing oil in the cargo. I mean, I'm pretty
That'd
sure
be
that's
awesome,
not-
though.
Yes, that will be awesome. That will be awesome.
But Nikhil, so tell me a little bit about IL&FS. I mean, I obviously want to draw some parallels to Lehman Brothers, although they might not be exact parallels, but sort of too big to fail, government expected to bail out, some kind of contagion effect. What is it?
So
What are your
contagion
thoughts?
effect, yes. Too big to failure in the Indian context, yes. But I don't think IL&FS has that kind of a globalized impact like a Lehman.
Okay.
I think Bloomberg was the first one to come up with this Lehman moment headline, and after which everyone just picked that up.
Yeah.
And they have been kind of, I mean, it's slightly different from that, right?
Oh, that's interesting. I did not know that.
Yeah, so in case of Lehman Brothers, obviously it kind of represented a systemic risk coming from, excessive securitization, asset mortgage-backed securities going to subprime lenders, and so many banks, credit rating agencies, everyone was kind of implicated in it. In case of IL&FS, the contagion comes from the fact that they depend a lot on commercial paper, on debentures, which are being used by other types of companies like NBFCs and housing finance companies as well. Right. So once investors got too scared of IL&FS, they withdrew from the overall market. And no wonder, I think in September was one of the lowest months of commercial paper issuances as a result. But yeah, whether it will have a kind of wide-springing impact on, non-banking, non-financial sector, I don't think so.
Okay.
I mean, let's face it, IL&FS has around 90,000 crore of debt.
Yeah.
Its turnover is in a couple of thousand crores. There are a lot more companies which are, bigger players. Yeah. So yeah, I think it's kind of a more localized thing.
Okay.
And yeah.
So the government, I think, intervened with installed a new team in place.
Yes, on
thoughts
Monday.
around that?
It is on paper, it's a new team, but if you look at the team, it's 6 people, one regulator, one bank CEO, and 4 bureaucrats. So not so new.
Seen this movie before?
Yes. So I think it's a kind of a rehash of the kind of structure they have, but I mean, I won't blame the government is being asked to bail them out.
Yeah.
So they might as well put some bureaucrats on top, right?
Yeah, that's true.
Yeah. And so yeah, I mean, in terms of what their priority right now, they are like looking for a new CEO and CFO, and then the liquidity support program and restructuring plan will kick off. I think IL&FS infrastructure is 20% up.
Oh,
now.
really?
Yeah. So obviously they know that now things are going to be back. And I mean, the problem is that it's it deserves to fail, but the usual thing, it's too big to fail, so it should be saved. And that's what everyone is looking for in the financing market and the infrastructure market. I mean, even though I do think there should be a lesson to rethink of how infrastructure is financed in our country. There are a couple of, there are so many things. There are covered bonds, there are project finance techniques, there are wholesale banks, all those techniques in which, you kind of take long-term liabilities to back long-term assets like infrastructure. That needs to be really figured out, because that's what created the problem in IL&FS in the first place.
IL&FS, man, like it's been going on forever. It seems like 3 weeks now. Like every time I open the business newspaper, like IL&FS jumps out. Like it's about time, I guess, I move on.
Yeah, I think we should both move on. Mr. Parthasarthi has definitely moved on. He's in London right now, getting a medical treatment, quote unquote.
Counting all the money he's made, yeah?
Yeah, apparently. Well, on that note, this is Nikhil.
And this is Sharad.
Signing off.